Hello and welcome. Well, as hard as it is to comprehend with a year that has been 2020 so far, we have just commenced the start of our new financial year. And everybody loves the opportunity for a considerable and lovely big chunky tax return, but no one ever really enjoys the arduous ordeal of having to prepare the information to submit to the ATO. And considering that Australia is in the midst of a recession, every dollar this year that we receive back in our tax returns is going to count. But the question is, what are we entitled to claim, and how can you ensure that you're prepared to get the most out of your return? Well, lucky for us, we welcome our special guest today, Mark Chapman. He's the Director of Tax Communications from H&R Block, who's here to tell us all. Thank you so much for joining us, Mark. How are you?
I'm good. How are you, Rachel?
Yeah, this is really, really exciting, this conversation. And as we were just chatting offline, this is going to help many Australian families, and there's lots to cover. But firstly, I guess as the Director of Tax Communications, I guess you would be everybody's best friend this time of year. Now tell me, how many times at the moment do you receive, I guess, a call or a text message from a friend just saying, I've just got a quick question to ask you? Do you get that a lot?
Yeah. It's certainly that time of the year. Everybody wants a little bit of tax advice about what they can claim or how a JobKeeper's treated, all of that kind of stuff. And that's been going on for quite a while, it has to be said. So, yeah, absolutely. Very much in demand.
Yes. Yeah, you'd definitely be everybody's friend or best friend at the moment, or the friend that everybody would love to have. Now, with the large percentage of us working from home, this year's tax return may seem a little more confusing than normal, to say the least. And provided that we have to calculate and take into consideration all of our living expenses like electricity and internet, and now in the winter months, heating. So we're going to deep dive into all of these questions in just a moment, with the hope that you're going to share some easy ways for families to submit a claim this year. But before we get to those questions, we published your article titled Top Tax Hacks to get the most out of your tax return. So for someone who hasn't read the article yet, could you please just give us an overview of what it's about and tell us what inspired you personally to write this?
Yeah, so the main point of the article is just to highlight the things that are really relevant to people at this time of the year. At the time I wrote the article, we were heading towards the end of financial year. Obviously now we're well and truly into tax return season. So it was all about bringing out those themes around the kinds of deductions that people can typically claim, amongst which are the working from home deductions that we'll talk about, but also, other things like work-related clothing and work-related travel, the sorts of documentation that you need to be able to support your claims, because that's really important. By and large, if you don't have invoices, receipts, that kind of thing, you can't make the claim. And if you don't have that, the ATO could end up auditing you, and that could cause some issues. So it was all about explaining to people what they need to be able to do to really get the best out of their tax return, get the highest refund, and be able to submit their tax return, hopefully with a minimum of stress and hassle.
Yes, and we'll have a link through to your article in the show notes. So to begin with, could you maybe just explain to us what are the big new changes that will affect Aussie tax returns this year then?
Look, probably the key thing is around deductions, the deductions that people can claim. So, the way people work has completely changed since about March this year, obviously due to COVID-19. So a lot of the deductions that people would normally have claimed, for using their car for work purposes or going on work-related trips or claiming work-related clothing, a lot of those claims will probably have gone by the wayside a little bit since March. But to compensate against that, about 35–40% of people have actually been working from home full time.
It's a large percentage, isn't it, really?
It is. Millions of Australians are working from home. And that means that there are certain deductions that they can claim in relation to doing that, in relation to those extra costs that they're now incurring. So, the deductions that people are claiming are going to look a little bit different. Some have gone up, some have gone down. On the income side, people are earning potentially JobKeeper, which is something they may never have seen before.
Yes.
They might have lost their job altogether, and they might now be on Job Seeker. They may have been made redundant and receive some sort of redundancy payment. All of these things flow through into your tax return. There are questions about whether these sorts of payments are taxable or not, and obviously that's an area I'm happy to talk about. And people have taken money out of super, up to $10,000 so far, and with another $10,000 cars that they can potentially take out now. So those payments are not taxable, but that's not something that a lot of people necessarily understand. So there's some confusion about how those payments are treated on their tax return too.
Yeah. So, what are I guess the biggest mistakes normally made when people are filling in their return?
Or look, about 25% of people who lodge themselves using the government's MyTax system will make some kind of mistake in relation to their tax return.
That's a lot,
Um,
really, isn't it? When you think.
it it is, but it's very easily done. And the most common things that people get wrong is that they claim a deduction when they don't have the proof that they spent the money. Sometimes people will claim for some sort of private expense that isn't deductible in the first place, and that can often include things like, the cost of the commute to and from work. Some people think that that's tax deductible, and it isn't. Potentially people can claim things in relation to working from home that aren't deductible, like part of their mortgage interest or their rent, those kinds of things. So again, that's quite a common thing that can happen. And another common one is that people miss off income from their tax return. Particularly around this time of the year in early July. A lot of that information is automatically downloaded from the ATO, but the ATO doesn't necessarily already have that information at this point in time. So bank interest, you might have a balance sitting in a bank that's earned some interest. You've forgotten about that and you've not included the interest on your tax return. So again, that's something that trips up a lot of taxpayers.
Yeah. And do you think the Aussies this year will be facing added stress at tax time due to all the changes associated with COVID-19?
Yeah, absolutely. I mean, about 60% of Aussies find doing a tax return stressful anyway, and that was before COVID-19 came along. So you add on all of these extra changes, these different deductions, these additional income streams that people didn't have before, and it can make things really quite complicated and stressful, because if people don't understand how these things flow through into their tax return, the scope for mistakes is increased.
Yeah. And you mentioned in the article that we should only claim what we are entitled to. So could you please maybe just talk through some of those common deductions that many taxpayers can claim?
Yeah, so well, the most common one at the moment are the working from home expenses.
Hmm.
Um, and there are different ways of claiming that. Just to make it even more confusing, there isn't one way of claiming your working from home expenses. There are actually three ways you could potentially claim.
We're going to,
Um,
and we'll dive into all of those later on the chat,
yeah,
because they are this particular year is quite confusing, isn't it? With the breakdown of three, but
yeah,
yes,
absolutely, absolutely. So we'll come on to that. The other
yeah.
common ones, if you use your car for work purposes, so if you're, at work and you go off to meet a client, or you go off to another office of your workplace, those journeys are potentially deductible. If you have to go away for a period of time, to a conference, or you travel interstate with work, usually those expenses are going to be deductible, assuming that your employer hasn't covered those costs. The costs of work-related clothing, if you have to wear a uniform for work, or you have some form of protective equipment in relation to your work, and you spend money on that, that would be deductible. And again, very topical at the moment, because lots of people have been going out and buying things like face masks and antibacterial spray, hand sanitizer. Those sorts of things are all potentially deductible as protective
Oh,
equipment.
wow.
Yeah, absolutely. So particularly if you're in a very much a sort of customer-facing job, like a hairdresser, or working in a beauty salon, or working in healthcare. So the chances are you're having to interact with people in a way that's not socially distanced. So that expenditure on PPE, personal protective equipment, is going to be tax deductible in those sorts of circumstances. Courses, if you go on a course, a work-related course, that's usually deductible. So lots of things I could go on, but those are the big ones that would apply to a lot of people.
Yes, and we do have that information listed in the article. And just to clarify, as you mentioned earlier on, with the traveling for work, it's not the traveling to and from work, it's only during the
Yes.
hours of work. Is that correct?
Yeah, that's absolutely right. So the journeys that you do during your working day, to the clients or the suppliers or to the other office, they're going to be deductible. But the journey to and from work at the beginning and the end of the day, that's not deductible, and that's one of the big mistakes that people often make.
Yes, yes. And so when and how can people claim deductions, I guess, from working from home, and what items can they claim and what can't they claim?
Yeah. So if you're working from home now, then you can claim those expenses that relate to your home working. Um, the easiest way of doing that, before I get into the ins and outs of what you can potentially claim, but the easiest way of doing this is to simply claim a new set rate that the ATO has put in place, and it's 80 cents per hour. So basically, you just keep a record of all of your hours of work, a timesheet or a diary or something like that, multiply the number of hours by 80 cents, and that gives you your deduction. So, if you've worked, for instance, 500 hours over the course of the COVID-19 period, because you've been working full time from home, multiply that by 80 cents, and that gives you your deduction, which would be whatever that is. It's about $420 or something.
S-
Um,
So this would be for things like heating, cooling, lighting, water bills, depreciation of home and office furniture fittings. Would it be
yes,
computers and things like
all
computer ink and printer ink? I mean, would you
yeah.
say?
So it includes all of those. You can't claim anything else if you want to claim that 80 cent per hour rate. Um, the other way of doing it, which will usually, in fact, almost always give you a bigger deduction, but it's harder to work out, is to claim each individual item based on your actual expenses. So all of the things you've just listed, the proportion of your electricity bill, your gas bill, the costs of any home office furniture that you might have bought during COVID-19.
Stationery.
So the desk, the chair, the stationery, the printer ink, the use of your mobile phone, the use of your home internet, if you've gone out and actually bought a computer or a laptop or a tablet, all of that, you can claim all of those individual items based on your work-related proportion. So you've got to work out how much of each expense relates to your work, which expenses you've actually incurred in the first place, and you can claim those on an item-by-item basis. That will usually give you a bigger claim, but it's harder to work out, and you do need all of those supporting documents. You need the invoices for your expenses, the bills to cover things like your phone or your internet or your electricity. You might need to work out how big your home office is compared to the size of your home overall. So it can get quite complicated, and that's where it's really useful to have a tax agent involved, because they'll work that out for you rather than you having to sort of sit down and work out all these different percentages and
Everything
the,
else.
the complicated bits.
Yeah, so the ATO this year has introduced a temporary shortcut method of calculating the additional running expenses, allowing the working from home to claim a rate of 80 cents per hour working during the coronavirus crisis. So, is it right
Yes.
that this will apply from the 1st of March until the 30th of June 2020? Is that correct?
Yeah, that's right. So that's the 80 cent method that I talked about earlier on. It was supposed to apply until the 30th of June. So it's good for the tax returns that you're about to put in now. I suspect the ATO will extend that because most people are still working from home. So they've not said anything yet, but I think that will probably apply this tax year as
So,
well.
so if we use the 80 cent per hour method, we can make no other claims in relation to working from home. So the items like you mentioned before,
Yeah,
and mobile phone, internet usage are all included in the 80 cent per rate. Is that right?
yeah, yeah,
Okay.
that's right. That's right.
So
Um,
sorry, go.
No, I was just going to say, typically that 80 cent rate, as I say, will generally give you a smaller deduction. Because if you just think about it, the amount of your mobile phone usage alone that you're using at the moment, if you're using your mobile phone extensively for work, just those costs alone would be quite expensive. And there's no way that 80 cent rate is actually going to cover that. So it's a nice, simple method of working it out, but it won't give you the best deduction.
So that is an existing flat rate allowance. Is
Uh,
that is that the
no,
flat?
just
No.
Just to complicate things, there is a third way of doing this, which is
Oh,
a different flat rate allowance of 52 cents per hour. That's the one that's always been around. The 80-cent one is new. The 52-cent rate covers most of those home office expenses, but it doesn't cover your mobile phone. It doesn't cover your home internet. Doesn't cover the cost of any tech items that you've gone out and bought, like a computer or a tablet. So all of those things can be claimed in addition to the 52-cent rate. So that's just a third way of doing it. That usually gives you a better deduction than the 80-cent rate, but a lesser deduction than claiming the actual costs. So, it can get quite complicated working out which one is going to give you the best result and then actually working it out. That's where, getting a tax agent involved will usually remove all of that stress.
stuff. So both of the 80-cent and the 52-cent options, should we have kept a diary and noted the times that we start each day and the times that we have our breaks.
Yep.
Is that for both, or is that only for the 52-cent per hour for working
That's
from
for
home?
both. That's for both. You're going to need that record of your hours in order to work out what your deduction is going to be, because you multiply the number of hours worked by the flat rate, whichever one you use, and that gives you your deduction. If the ATO comes along and says, "How have you worked this out?" you might need to produce that diary or those timesheets just to prove that you were actually working the hours that you claimed.
And what about claiming on the work proportion of items such as home internet, mobile phone, printer, ink? How does that work then?
Well, first of all, you need to work out to what extent the cost that you're claiming for relates to your work use and to what extent it relates to your private use. And that's where it gets complicated, because with things like your electricity bill, for instance, obviously your home office is just part of your house. So you can't claim for the entire electricity bill. You can only claim for the bit that relates to your home office.
That's the thing, yeah.
And also the only for the part that relates to when you're in there working. So not when you're in there just surfing the internet or paying your bills, or the kids are using it for homeschooling.
Or watching
So
Netflix.
yeah, exactly. So you can't claim for those bits. So that's where it gets complicated, because you've got to work out how much of your home relates to your home office, and then how much of the use of that office relates to your work.
Yeah.
Um, so, that's obviously for every different household, that will be a different calculation, but you do need to have a stab at doing that, or your tax agent needs to have a stab at doing that, so that you can work out what the percentage would be. There's no real rule of thumb other than to say, if you're thinking of claiming 95%, forget it, because that's never going to fly. It could be 10%, 15%. Those are usually the kinds of figures that you're looking at, but you've really got to at least have a stab at that calculation just to figure out what it should be.
And what about claiming on the actual costs that we have incurred? What do we do, and what needs to be done here then?
Yeah, so that's where you take that work percentage, and then you just apply that to the cost. So, if you determine that 10% of your, for instance, your electricity bill relates to the cost of lighting your home office and heating your home office, then you just claim 10% of whatever your electricity bill is on a monthly or quarterly basis. That sounds simpler than it is, because obviously working out that work-related percentage is the difficult bit, if you like.
So this works out the work relation proportion of our household expenses and applies this percentage to the actual
Yep.
amount that we spend on our electricity, our gas, water, phone, internet, all of that stuff. So do we need to have kept all the original bills to prove the claim? And does this, I guess, generally produce a bigger claim than either one of the 80-cent or 52-cent rate methods?
Yeah, so the bad news is that you do need to keep all of those receipts.
Mm-hmm.
So, all of your phone bills, electricity bills, the receipts that you might have got for purchasing your computer or your desk, you've got to have kept all of that. The good news is that, yes, it does produce a bigger deduction. Um, everybody's different. Every household is different, but on average, the deduction doing it that way will usually be 3-4 times bigger than
Oh
if you
gosh,
simply use
it's worth
the
it.
80-cent rate. So it is worth it. If you've not kept the paperwork, unfortunately, probably it's too late now. But if you have, it's definitely worthwhile trying to work that out, because as I say, it will potentially pay off by a much bigger deduction.
So the downside is that the amount of paperwork and calculation involved is much greater, but pretty
Yes.
much that we should use maybe a tax agent to help with the claim, I guess, if you intend to use that method, would you say?
Oh, absolutely. It is complicated to work out. There is a lot of paperwork involved. Get somebody else to work it out for you, and that will make it a lot more straightforward.
And with regards to children, do children need to lodge a tax return?
They can do, potentially, in theory. I mean, if they have some form of income, then they might need to lodge a tax return. So, if they've got a part-time job and that's paying them more than the tax-free threshold, then they might need to lodge. If they've received JobKeeper, a lot of people might have had a part-time job that wasn't actually paying them very much. But as a result of JobKeeper, suddenly they're getting $1,500 a fortnight, which might have been substantially more than they were getting before. So again, that could have tipped them into a position where they might have to pay tax, and that could mean they have to lodge a tax return. If you've got some investments that you've put in your children's names, shares or a bank account, that could produce dividends or interest. And again, that might mean that they have to lodge a tax return. Although there's usually issues there as to whether the income that's been produced is actually the child's income or whether it's actually really the parent's income. So there's a bit of a conversation that needs to happen there to determine whether it's actually the child's tax liability or yours as the parent.
Yes. And getting back to JobKeeper and job seeker payments, will people have to pay more on their tax return this year or less with regards to those particular payments?
Yeah, it depends on the circumstances. So both JobKeeper and JobSeeker are taxable, so they do need to go onto your tax return. If you're on JobKeeper, your employer will just include all of that in your year-end payment summary or your income statement, as it's called now. So you shouldn't have to do too much in terms of admin there. It will just appear directly from the ATO. If you're one of those people who has basically had a pay rise because of JobKeeper, so you're previously earning, less than $1,500 a fortnight, and now you're getting that $1,500 JobKeeper, that could mean you'll have a higher tax bill this year because your income could
Has
work out
increased.
to be higher. Alternatively, if you're in probably the bigger category of people who've actually taken a pay cut because of JobKeeper, so you might have been earning two and a half, whatever, per fortnight before. Now you've gone down to 1,500 because of JobKeeper. You could find yourself in a position where actually you're going to get a bigger refund because you've overpaid tax during the earlier part of the year, and the fact that your income has been reduced for those last 3 or 4 months will flow through into a potentially quite a significantly bigger tax refund.
Hmm. Well, I guess there's a reason why 74% of Australians use a tax agent to help prepare their tax. Tax
Yeah,
can be
absolutely.
very, very complicated. And I guess if you get it wrong, you can either receive a lower refund or have to deal, I guess, with ATO penalties, as you said at the start of
Yeah.
our chat, which wouldn't be very nice email or phone call to receive. That's for sure. But what about the people who do lodge their own and have previously lodged their own? What about the pre-filled forms from the ATO? What should we be aware when using them in particular?
Yeah, so these days, a lot of your income information, especially, does get automatically filled in by the ATO. So your employer will send your information across to the ATO, and that will then just drop straight into your tax return. Same with things like bank interest, if you've had any of that, or dividends on shares. Your private health information gets sent straight to the ATO and just goes straight into your tax return. That's really helpful from the perspective of people who are self-lodging, because it means they don't have to worry about finding all of their pay slips and adding it all up. It just gets dropped straight into your tax return. The problem is, particularly in July, particularly in the first half of July, a lot of that information hasn't appeared yet. So your employers haven't sent your stuff across to the ATO. Your private health fund hasn't sent the information to the ATO. So if you're lodging for the first 2 or 3 weeks of July, you might find that there are gaps. And it's up to you to spot that those gaps are there and either decide to wait until the information comes through, or if you want to lodge earlier, to be able to put that information in manually. So there is a bit of a burden of responsibility on taxpayers. Don't assume that just because information is pre-filled from the ATO that it's correct and it's all complete. it may well not be. Once you get into August, this problem kind of disappears because everybody's done what they need to do. It's all there. It all gets pre-filled automatically. But for July lodgers, they've just got to be a little bit careful. Otherwise, they might end up having to relodge their tax return later on once the information comes through.
So should people possibly wait till mid-July then to lodge
Yeah.
their return, would you say?
Yeah, once you get through into about the third week of July, you've got a bit more confidence that that information is complete. Once you get to the end of July, you can be, 95% confident that it's complete. You've
Everything's
always just got to be aware that there could be things missing. So just do a bit of a check. But yeah, as we get into late July, early August, you can be pretty confident that everybody's done what they need to and all of your information will be there.
Yeah, it is much less stressful, I guess, to either pass your information onto a tax agent. They would know the best time to lodge, I guess, that information. And especially this year with all the added calculations with working from home expenses, it's going to be even more so challenging, I guess. But
Yeah, that's right.
I'd love to know from your perspective, how can Aussies determine whether they should lodge a tax return either online via a tax agent or themselves?
Look, if you've got a very straightforward tax return, so you might have just had one job during the course of the year, very limited deductions, maybe a bit of bank interest, then you're probably fine to lodge yourself through My Tax. But if your taxes are looking a little bit more complex, if you've had more than one job, perhaps you might have been working multiple jobs at the same time. If you've got a business, if you've got rental properties, if you've got different deductions like the working from home ones that we've just talked about, in those kind of situations, it's going to become increasingly difficult for you to do it yourself and get it right. And that's the kind of situation where you probably need to be thinking about using a tax agent to do it for you, just so that you're not making those common mistakes in terms of claiming things you're not entitled to, or not claiming things you are entitled to. You're not missing things off, and you're avoiding all of those common traps that people fall into.
And what about the face to face? I mean, I've every year gone in and seen my accountant face to face, had a good old catch up on life and how things been the last 12 months and all of that stuff. But by the looks of things, with social distancing this year, that may not be the case. So, I mean, what is sort of, I guess, the status quo now with tax agents? Everything is now done online or not?
No, I mean, you can do tax agents. You can do returns online through a tax agent. I mean, H&R Block, we do have an online service that you can use if you don't particularly want to have that face-to-face interaction. Having said that, all of our offices are open, and that's the case for most tax agents. Everybody's socially distanced these days, so the offices are set up to accommodate social distancing. There are hand sanitation areas, so you don't need to be concerned that they're potentially difficult environments. That's been taken care of. Having said that, it is still possible for you to use telephone appointments, so you can basically do your tax return over the phone. You can do it online. There are lots of different ways of getting into a tax agent's expertise, and that could include face-to-face, or it could include Zoom conferencing like this, or it could include phone or simple online service where you're not actually interacting directly with a tax agent at all. You're just downloading your information into a portal. Our staff will then take that information, prepare the return, and then send you the return back. Lots of different ways of doing it this year.
Yes, and so where you need examples of like bills and those types of things, is it just a matter of taking a photo of those bills and or having some form of evidence that you would then sort of include in that online submission then?
Yeah, if you're doing it online, you can download or upload, whatever the word is, documents into a portal so that the person who's preparing the return can actually see the substantiation. Obviously, if you're doing it face to face, you can just produce the documentation. So it's always possible for if the tax agent wants to see that proof, it's always possible for that to be done either electronically or the old-fashioned way.
Do you think this will change things in the future then? So, you would pray to the heavens above that this time next year that we would be sort of COVID clear, and this COVID recession would sort of hopefully be been and gone. But I just wonder if all of this online submission will continue to increase for years to come. I don't know. What are your thoughts?
Oh, look, I think this is a trend that's been around for a while anyway. Um, you know, that people like to interact in relation to this kind of thing in different ways. Some people like to do it face to face across a desk in an office, and they do like to have that human interaction. Other people are quite happy to just do it all online, and that's been a trend, for several years now. So I think COVID-19 has really just locked in those trends.
Mm.
It might accelerate the shift from one to the other, or it might not. Who knows? We might just go back to normal once we get to a situation where this is under control and we've got a vaccine. It'll be interesting to see how that flows through. But I think there's always going to be a lot of people who do actually like to go into an office and just
Still see.
spend just get that human contact and the old-fashioned way, if you like.
Yeah, well, who knows where the world will be in 12 months' time. But for the meantime, we definitely have some challenges, or just a little bit more challenging sort of tax return this year. And this chat has been extremely helpful, no doubt, for all of our listeners and everyone watching. So if you were to, I guess, summarize your key messages, Mark, for everyone watching and listening, what would they be?
I would just emphasize that this tax return is probably going to look a little bit different for a lot of people. Different income, different deductions. You might not be too comfortable with the way some of the things that have changed will actually impact your taxes. So, if you are feeling a little bit concerned, a little bit stressed about doing your tax return this year, particularly because you could be looking at a bigger refund, it is worthwhile going to talk to one of our H&R Block offices, or just using a tax agent generally. As I say, it is a lot less stressful doing it that way rather than trying to use my tax, which is where a lot of people tend to make mistakes.
Mm-hmm. And as mentioned before, in the show notes, we'll have a link through to your article, which goes into depth about that 80 cent and the 52 cent sort of claiming options and all of the other information. But aside from that, if anyone else has got any other questions for you or anyone at H&R Block, whereabouts can they find you guys?
Oh, we're on the web. Just search for H&R Block, and you'll find us. We've got about 450 offices across Australia, so you're never too far away. Absolutely, you're never too far away from one of our offices. So find your local one. Give them a call if you want some advice, or book an appointment if you actually want to do your return.
Wonderful. Thank you, Mark, so much for your time today. It's been a great pleasure speaking with you. Take care and stay safe. Take care.
Thank you. It's been a pleasure. Cheers.
Okay. Bye.
Bye.